Is there one thing that you wish everyone, if whether they're a Bitcoin fan or they're just thinking about Bitcoin or they maybe that this is the first time that somehow they stumbled upon this show and they're just hearing about Bitcoin for the first time, what do you wish people understood about money today, about the system as it exists today, that maybe is not widely understood?
I think that the biggest thing to realize is that the baseline for price inflation is not zero. It's negative because on average we get more productive at things, not less productive. And therefore, the thing you always want to focus on, the question you want to ask with most financial assets is what is my rate of dilution? If I'm holding dollars or any other currency, look up the long-term growth rate of that thing you're holding, offset by whatever interest rate you expect to get on that holding, and that's your net dilution. So if your money supply is growing up by 7% a year and you're getting a 4% interest rate, you're getting diluted by an average of 3% per year. Your share of the network, aside from new income that you're actively working for, just your passive share of the network is shrinking. And it means someone else is growing, someone else is getting that. And so that's number one. And that applies for multiple things. That applies for, if you're holding gold, your long-term dilution rate is somewhere around 1.5%. And you can look that up for yourself. If you're holding equities, sometimes they're issuing shares, sometimes they're buying back shares. You can also think of it in terms of market share, or other companies kind of taking market share from your company on average, or your kind of national stock index. And then same thing with real estate. If you own real estate, there's some degree of new growth that like the new construction that's happening. And so your share of, all houses that exist is shrinking, which can be a funny way of looking at it. But I think if you apply that lens to everything you could own as savings, that's a really important baseline. So CPI is not your target, not getting diluted is one of your main targets. The second thing I'll say is actually about Bitcoin rather than the existing system. If people ask me one thing I wish they'd know that I don't see commonly mentioned, um, there's a natural tendency to assume in technology that new things displace old things, that anything newer is going to be just better in every variable than older things. So new computers generally better than an older computer, for example. Newer software is better than software from a while ago, with some exceptions. Um, and so people naturally assume that, okay, Bitcoin is cool, but it's 16 years old. Why shouldn't I assume some of these newer ones are better? And my general answer to that is the main exception for that rule of newer technology being better is communication protocols. So things like Ethernet, that's 50 years old, we're still using Ethernet. USB, something like 30 years old, we're still using it. Simple mail transfer protocol, something like 45 years old, still going strong. Internet protocol is in the so far in the age of the internet, the answer for how long a communication protocol lasts once it becomes dominant is indefinitely. We don't really know how long these things last because they're going on decades and they're still just as strong as they ever were. And some of them gradually update over time. So Ethernet is faster than Ethernet from 20 years ago. USB 3.0 is faster than Ethernet 1.0. And what they have in common is that they achieve network effects and they're by design, they're purposely simple, and things that change more rapidly are on the edges of the network or on higher layers of the network. And Bitcoin, I would generally argue, is that 16 years in, it's the dominant communication protocol for money, and it exhibits very similar dynamics or similar aspects to those other types of communication systems. And I generally think that's the right way to conceptualize it as a technology, not as something that keeps coming and disrupting the prior thing, but something that gets tested, wins whatever early dominance it needs to win, achieves large market share, and then becomes a pretty persistent part of our digital lives.
Does that mean it's fair to say that for somebody who's still hesitant maybe about Bitcoin because they're feeling like I've missed the boat, I'm too late, does that mean that they're still early in this development?
I think so, especially on a risk-adjusted basis. It's not as early as 2011, but it takes much less risk than it did in 2011. And one way to think of it is that the Bitcoin network is something like 0.2% of global assets. Um, Gold is something like 2% of global assets, so about 10 times bigger. Um, and all the other assets together, so savings accounts, bonds, real estate, and equities, and private businesses, that's the other 98%. And so one way to think of it is, what is the total addressable market of a portable, leading type of money with no long-term supply growth that you can self-custody yourself, or that you can send to anyone in the world in seconds or minutes, depending on what layer of the network you're using. Um, I think that's worth at least several percentage points of global assets. Some people have higher estimates, and they're not necessarily wrong. I think point two is still early. I would advise people against unit bias. We look at it as 21 million Bitcoin, but it's actually 2.1 quadrillion units. In the actual code, that's the actual unit. It's just the underlying Satoshi unit that we call it now. Satoshis are still very cheap, and I think the network is still very small compared to what it could become and what it should become, as long as some core tenets of it keep working as expected.
Well, that's a heck of a pitch. If I wasn't already sold on Bitcoin, I think I would be again.